Hi everyone, it's Chris here from Serene Education. I'm going to be doing the four majors for the 14th to the 20th of December. Going to give you a 4 weeks analysis and give a breakdown of what happened the prior week and what we could expect for the week ahead. Starting with the euro against the US dollar on the weekly, let's have a look and see what happened. So last week you can quite clearly see we had a bullish engulfing candle as we saw US negativity and a lot of strength on those cross pairs against the US dollar. And subsequently what we've seen is a pullback against the long-term trend. In this case, you can see euro has been negative, has been trading below that weekly fib level for quite some time now. And you can see last week's candle engulfing the prior bearish engulfing candle to the downside. So what we have is price now back up under the 23.6 or the weekly fib level here at the 12495 mark. So clearly, if we are seeing a bit of negativity of the US dollar, is this going to be the scenario for the remainder of December going into January? That is to be seen. But you can quite clearly see that all of the prior week's negativity was taken away or driven back on last week's close. And what it has done is taken price back to the underside of that weekly fib level. So clearly you can see we're still trading below that weekly fib level, which was prior support at one stage through most of November. However, going forward October, November, and going December, you can quite clearly see we've had resistance over the past month or so. So clearly, if we are to see any bias to the upside for the euro, then clearly we want to get it back above the 23.6 level, find support above here, and then we could start looking to target back up towards the prior weekly fib level, which was at the 38.2 level at the 1278 and change mark. So for this week, what we're looking for, especially on the daily, is to get price back up above that current 23.6 level here, the weekly level. And you can quite clearly see on the daily, Sunday evening is trading very indecisive, small range, but you can clearly see that we saw Friday, Thursday, Wednesday, and before that, the prior week, also having a lot of resistance going into this weekly fib level. So clearly, we've got to get above this level to see any further pullbacks. Against the long-term trend. You can quite clearly see the candlesticks are still very much to the downside. We do have a blue arrow in play on the daily. However, you can see the long-term sentiment still favoring the downside, so we should still be looking for that negative sentiment to play through. Yes, things have changed intraday, but you can see the R-squared is not complementing any of this bullish bias here. So clearly, we are seeing a consolidation against the long-term trend. And however, as long as this 23.6 level here remains above price, resisting price, we should still be looking for that negativity to play through and a reattempt of the current lows which just come through from the start of December. So clearly, if anything, looking for either a break higher for change in market sentiment to the upside. However, the overall sentiment is still looking negative. Therefore, we should be looking to the downside for the foreseeable future. Moving on to sterling. Here we go. We're on the weekly time frame. Yet again, you can see the long-term sentiment of here clearly negative. You can see that we have seen a lot of negativity through most of this year, in fact, and you can see where price is trading now in conjunction to any major support and resistance levels. The fib level, you can see a lot of hesitation. The prior 3 weeks before that, or the month ago, you could see a lot of hesitation. Yes, last week's bullish engulfing candle, as I mentioned to you on the euro, same thing happened on the sterling. We had a major pullback against long-term sentiment, and you can quite clearly see that price is now back up just slightly higher, closed higher, funny enough, above the 38.2 level on the weekly fib level. So you can see now, if I drop down to the daily time frame, you can see, let me just move this out the way so you guys can see price action. There we go. You can see that we've got price trading above the weekly fib level. We saw Wednesday's break higher. Thursday, we saw a bit of a pullback during the course of that day. However, price actually maintained the highs. Then going into Friday, we saw a lot of indecision on price, and that actually came out as a doji, smack bang on that 38.2 level. And then Sunday evening trading, also very indecisive, little spinning top here. And then Monday, you can quite clearly see that we haven't seen any momentum carrying forward. But you can see the last 2 days, in fact, indecisive, and you can see a lot of indecision. But however, that indecisiveness is still taking place above the weekly fib level, the 38.2. So we're looking to use these these weekly fibs and monthly fibs as support and resistance levels. So clearly here, price maintaining that bias to the upside over last week and getting above it. But we've seen a lot of indecision once we've been above it. You can see a lot of hesitation, consolidation in the same area before. So we've got to take that on board. However, the longer she spends above the 38.2 level, here at 157 and change, that means we could see price building on that momentum and clearly moving higher. we could be looking at examples of roughly around this area over here, back up towards that 50 period moving average, or the price support and resistance levels as target 1. But ultimately we still see positiveness growing on this level over here, building over here. Then we're looking towards our weekly fib level here at the 50% at 159, just short of that 1600 mark, that psychological round number that traders like so much. This week, as long as price can maintain above 38.2, then we should be looking for further highs for the remainder of this week. Failure to actually hang on to these levels over here and price breaks back below and we see a daily close lower, that means we should be looking for a continuation in the direction of the long-term trend, which is negative. The candlesticks are still negative. Then we should be looking to target back to that prior support and resistance level low here, or this morning star formation here at the 155.6 and change mark. US dollar Swiss franc, if the euro is moving lower, then we expect to see the US dollar Swiss franc moving higher. And if we are seeing consolidation against the long-term trend for euro, therefore we should see the exact same thing playing out for the US dollar Swiss franc, and you can see quite clearly bullish engulfing candle on the euro against US dollar. Here we go, we have a bearish engulfing candle. And the most important thing about this one over here is you can quite clearly see that we have a coming together of not only the monthly fib levels, and I'll just put this over here so you can see it. We have the 76.4 and the 78.6 level, which price is currently trading within. And if I just pan out, you can see the significance of this level as price over the years, since 2008 in fact, has actually used as a price support level. And then once you got below it, when you retrace back to the upside, you can see she was using it as a major resistance level going forward. So what we're looking for over here in particular is, if we are to see any US dollar Swiss franc strength going forward, we need to get price, or we need to see price trading above this monthly fib level, between this dark red line, getting above it and maintaining above it, and then ideally moving towards this weekly fib level, which will be the highs that we've seen, and getting above that. This is clean air. This is ideally the area we want to be trading within. You can see a lot of consolidations occurred within this range, guys, over the years. So imperative that we get higher. If the US dollar Swiss franc is positive to the upside, we need to see new highs. However, last week's candle engulfed, took that all back, took all that building pressure that we saw the prior week after we saw significant resistance through most of November. Now we're into December. You can see the first week of December we saw a punch up. Now we want to see last week's candle actually being supported above this monthly fib level. However, that failed to materialize as price broke back below that level and then continued to the downside and engulfed. Closed Friday night, engulfing the prior weekly candle of major upside. So now we're clearly back below a major support and resistance level here, which is the 76.4 level, which is the 0.97. So as long as this monthly fib level maintains above price, then we should be looking for further resistance. We're looking for this monthly fib to act now as a resistance level to push price lower. So intraday, what we're looking for, or daily, excuse me, let's just go to the daily and see that. You can see a lot of building. However, on the pullback, we didn't see that bounce. It failed to break, pullback, and then a continuation lower. But you can see that the monthly fib level here on the US dollar Swiss franc has been supportive through October, November in particular. And if I pan out, it might be even going further back to that August, June, July period. So you can see the upside is still very much, you can see price is still moving to the upside, very much to the upside. Okay. However, back below this major support and resistance level, which is the 76.4 level. So now we're seeing a bit more selling pressure coming on board now for the US dollar against the chief. We've seen a lot of positiveness for the chief, and that's playing ball and pushing price lower. Now you can see a lot of hesitation. Now what we'd like to see is the actual support level here that we saw through last week, in fact, actually being broken, ideally breaking below the monthly fib, the 50 period moving average, and then we could potentially target back towards the 78.6, which is a genuine fib level here at the 947 and change mark. So we're looking, and ultimately if you get below that 50 period moving average and we get a nice bearish engulfing candle continuation, we're looking at approximately 140 odd pips to that level. But it is a consolidated range, guys. You are going to take on a lot more risk because you can see how price has been very hesitant while it's been trading between these 2 points. So take that on board. We are going into the last couple of weeks before Christmas. We're likely to see less movement because of that volume traded on the particular pair. So just take that on board and just trade with a bit more caution on this particular pair. I'm going to close it with the US dollar Japanese yen. Here again, the weekly for the US dollar, we saw a lot of negativity for the US dollar against most of its cross pairs, and sure enough, we had the same effect on the US dollar Japanese yen. We saw the prior week actually breaking above a monthly fib level here at the 38.2 at 120.097. But we wanted to see price then pulling back, which happens 90% of the time. But we wanted to see a support candle being forged during the course of last week. That failed to materialize as price broke aggressively back below that weekly fib level, the monthly fib level. And then subsequently, by the end of play on Friday evening, we saw price actually falling low enough to actually engulf the prior week before that. So now we have a tweezer top, which is a very negative, or it is a negative candlestick formation because it represents negativity at the top of a trend. You can quite clearly see we have been in a bull trend for quite some time now, and we're trading, and this candlestick is actually forming at a major support and resistance level, in this case the monthly fib level. So you can see that the start of last night, in fact, we are still trading at the lows of last week's candle, in fact. So if I drop down to the daily time frame, you can see that we had a pullback going into the close. This is Friday, this is Sunday evening. You can see that Thursday and Wednesday's lows, price is not too far off from those levels. So ideally, if we are to see any further negativity on the outcome of that tweezer top, then we need to see the support level lows here at 11751 being breached to see any further continuations to the downside for this particular pair for the remainder of this week. And we could look to potentially target the 23.6, which is our weekly fib level here at 11274 for this coming week as our target. Failure to actually break this current support here at 117, which was last week's support, then ultimately we could see for further consolidation with the reattempt of the weekly fib, the monthly fib we've just come from through last week. So very, very important to support. If we are to see the weekly fib level, the weekly candlestick pattern play out in terms of a bearish tweezer top, then we need to see the support being broken, and then we could target this level down here. Failure to see that happen, guys, then we're going to see a further consolidation and a reattempt of the monthly fib level we've just come from here at 38.2. So take that on board. Very, very important support and resistance level. I would strongly suggest you actually apply your trigger alert to this level and look for a nice daily close, higher or lower on here. Either bullish engulfing to confirm we should be looking for further highs. The candlesticks are still telling us we should be looking upside. The only thing that's not in play is the actual red arrow. The other scenario would be a bearish engulfing candle close lower, turning red, and then we would look to target the 23.6 below us. Okay, guys, that's it, short and sweet. I hope you have a fantastic trading week ahead. Please be aware that there's going to be news out this week. There is news out this week. We might see a lot of indecision creeping into the market now as we head into that festive period. We're not too far off now from Christmas, so we're likely to see less liquidity on the market as we head into that festive season as people take breaks. Okay, so be aware of that. If you are looking to trade any pairs, please back it up with sound money management. Very, very important. You can have the best template in the world, but if you don't back it up with sound money management, it's going to be worth nothing. I keep referring to that, and I'm going to keep drumming it into people's minds. It's so important that we back up our trading with very, very sound money management rules. Okay, keep it simple as I mentioned to you. We don't want to overcomplicate our trading. Look for those opportunities in the market, and then if your template's actually really genuinely helping you out and it's giving the sentiment, then back it up with sound money management and just apply it in your trading. Okay, I'm going to leave you with that. I hope you have a fantastic week, and I'll see you the following week. Until then, you guys trade serenely.